Introduction: The genesis of Bitcoin. In 2008, the world was engulfed in one of the most severe financial crises in history, a crisis that shook global confidence in banks and financial institutions. It was in this context of uncertainty and discontent that a revolutionary proposal emerged, a document known as the Bitcoin White Paper, published under the pseudonym Satoshi Nakamoto. This document proposed a bold idea: the creation of a fully decentralized digital currency, operating beyond the reach of traditional monetary authorities. Bitcoin promised not just a new form of money, but a new financial system where transactions could be conducted peer-to-peer, without intermediaries, secured by a technology called blockchain. Nakamoto's proposal not only introduced a currency but also a new concept of trust, not placed in fallible institutions but in the robustness of open-source code and a network of computers distributed around the world. This system, the blockchain, is essentially a public and immutable ledger where all transactions are recorded in blocks linked and secured by cryptography. Each block built upon the previous one forms an unbreakable and transparent chain, ensuring that each Bitcoin can only be spent once and that transactions are open for verification by anyone. The genesis of Bitcoin was marked not only by its innovative proposal but also by its perfect timing. At a moment when trust in traditional finances was shattered, Bitcoin presented an alternative that did not rely on governments or central banks, offering a safe harbor against monetary manipulation and inflation, problems often accompanying financial crises. The idea of a more democratic and accessible financial system began to gain followers, attracting a diverse group of enthusiasts, from libertarians to technologists, and ordinary people tired of the limitations and fees of traditional banking systems. Although the concept of cryptocurrencies was complex and understanding of Bitcoin was still limited to a relatively small group, the seed planted by Satoshi Nakamoto began to germinate. Bitcoin not only survived its early years but also began to flourish, fueled by a growing community that saw in this new technology not just an investment form but the promise of a financial revolution. Blockchain, the technology behind Bitcoin. The true innovation of Bitcoin lies not just in its ability to act as digital money but at the heart of its operation, the blockchain. This technology, which emerged alongside Bitcoin, represented a radical break from traditional financial systems, as it introduced an entirely new way of recording transactions and managing data in a decentralized and secure manner. Blockchain is essentially a distributed ledger that records all Bitcoin transactions in a series of blocks. Each block contains a list of recent transactions and a reference to the preceding block, creating a continuous and immutable chain of records. The process of adding a block to the chain is known as mining, an activity that requires a significant amount of computational power. Miners compete to solve complex mathematical problems that, when solved, allow the block to be added to the chain, ensuring the integrity and chronology of transactions. As a reward for this work, miners receive new Bitcoins, an incentive that not only sustains the mining process but also controls the emission of new Bitcoins according to a predefined algorithm, which limits the total number of Bitcoins that will be created to 21 million. The security of the blockchain stems from its decentralized structure and advanced cryptography. Once a block is added to the chain, it cannot be altered without rewriting all subsequent blocks, a task nearly impossible to perform without control of the majority of the network. This makes the blockchain extremely secure against fraud and manipulation. Additionally, as the blockchain is maintained by a distributed network of computers, there is no single point of failure. Even if part of the network is compromised, data elsewhere remains secure and accessible. This technology not only supports Bitcoin but has the potential to revolutionize many other sectors, offering ways to ensure data integrity without the need for trusted intermediaries. From smart contracts that execute automatically when certain conditions are met, to electronic voting systems and identity management, the blockchain is opening up new possibilities that extend well beyond finance. Thus, while Bitcoin introduced the world to the idea of decentralized digital money, the blockchain promises to be a transformative force with even broader and deeper impacts. The first transaction and initial growth. When Bitcoin was launched in 2009, its first symbolic transaction marked the beginning of a new era in the history of digital money. This inaugural transaction was between Satoshi Nakamoto, the enigmatic creator of Bitcoin, and Hal Finney, a renowned cryptographer and cryptocurrency enthusiast. Finney was one of the first supporters of Nakamoto's idea, and the transfer of 10 Bitcoins between them not only tested the Bitcoin operating system but also demonstrated the viability of digital transactions without the need for a central authority. This event not only validated the system's functionality but also established the first real and practical connection of Nakamoto's theory with the real world. After this first transaction, Bitcoin began to attract the attention of a small, yet growing, community of technology and cryptography enthusiasts. These early users were motivated both by technical curiosity and the desire to participate in an alternative financial system, which promised greater privacy and less dependence on traditional financial institutions. Initial adoption was slow, mainly because Bitcoin was still a difficult concept for the general public to understand, and its value was not yet clear. However, one of the most notable events that helped put Bitcoin on the map was the famous purchase of 2 pizzas in May 2010. A programmer named Laszlo Hanieks used 10,000 Bitcoins to buy 2 pizzas, marking what is celebrated today as Bitcoin Pizza Day. At the time, these Bitcoins were worth just a few dollars, but this transaction was a significant milestone because it was one of the first times Bitcoin was used as a real form of currency to buy tangible goods. This symbolic act demonstrated Bitcoin's practical potential as a currency and was a crucial step toward its subsequent recognition and valuation. The growth of Bitcoin after these initial steps was gradual. As more people began to understand and experiment with Bitcoin, the network grew, and with it, the value of the currency. An active development community and increased media coverage helped foster broader interest. Online forums and discussion groups were crucial for disseminating information, sharing knowledge, and solving the technical challenges associated with using and mining Bitcoin. This initial period of experimentation and adoption laid the foundation for the explosive growth spurts that Bitcoin would experience in the following years, as it began to capture the imagination of a wider public and investors looking for new investment opportunities in an increasingly digitalized world. Highs and lows, the volatility of Bitcoin. From its inception, Bitcoin has been characterized by its extreme volatility, a trait that has attracted investors looking for high returns and raised concerns about its stability as a currency. The highs and lows of Bitcoin are notorious, with dramatic price changes often occurring within very short periods. This volatility is attributed to several factors, including, but not limited to, the speculative nature of the currency, its relatively small investor base, variations in the perception of its intrinsic value, and geopolitical and regulatory events that can swiftly influence market confidence. The price trajectory of Bitcoin has been anything but predictable. From the days when it was worth just a few cents, to reaching nearly $20,000 in 2017, then plummeting and rising again to new records above $60,000 in 2021, Bitcoin has kept investors and analysts on the edge of their seats. In 2024, Bitcoin reached a new historical high, hitting $73,750. This new peak in price reflects a combination of increasing institutional adoption, technological innovations within the blockchain, and renewed interest in safe assets during times of global economic uncertainty. In addition to economic aspects, the very nature of Bitcoin as a limited asset, with a maximum of 21 million Bitcoins that will eventually be mined, also contributes to its volatility. This programmed scarcity, akin to resources like gold, is seen by many as a hedge against inflation and currency depreciation, but it also means that small changes in demand can cause large price swings. Bitcoin's volatility is also exacerbated by its popularity on trading platforms that offer high leverage options for cryptocurrency trading. These platforms allow traders to bet large sums of money on relatively small price movements, which can amplify both gains and losses and, consequently, market volatility. Despite this instability, many see Bitcoin's volatility not as a flaw but as an inevitable and even beneficial characteristic of a new type of asset that is still finding its place in the financial world. For enthusiasts and investors, the roller coaster of prices is seen as part of the journey of an innovative technology that is challenging traditional concepts of money and investment. While the future of Bitcoin remains uncertain, its ability to generate discussion and fascination remains undisputed, proving to be an intriguing piece in the evolution of digital money. Challenges and criticisms. Bitcoin, despite being a revolutionary innovation in the world of finance, is not without its critics and faces several significant challenges. One of the most debated points is its energy consumption. Bitcoin mining, the process by which new Bitcoins are generated and transactions are verified, requires a colossal amount of electrical energy. Most of this energy still comes from non-renewable sources, raising significant environmental concerns. Activists and sustainability experts question the long-term viability of Bitcoin, pointing to its negative environmental impact as a crucial hurdle for its widespread adoption. Beyond environmental issues, Bitcoin also faces criticisms related to its use in illegal activities. Due to its relative anonymity and lack of centralized regulation, Bitcoin has become the preferred currency in various illicit operations, including drug trafficking, money laundering, and other forms of illegal trade on the dark web. This association harms its image and increases pressure for more stringent regulations from governments around the world. Bitcoin's volatility is another critical challenge. While it can offer high returns for investors, the extreme fluctuations in price make Bitcoin a risky asset, unsuitable for those seeking stability in their investments. This volatility also impedes its function as a practical currency for day-to-day transactions, as both consumers and merchants face uncertainties about the real value that Bitcoin will have from one day to the next. Government regulations represent an additional challenge. Different countries have adopted varied approaches to Bitcoin, from outright bans to cautious adoption with strict regulations. This lack of uniformity complicates the global use of Bitcoin and contributes to market uncertainty. Investors and users must navigate a labyrinth of laws and guidelines, which can discourage mass adoption and limit Bitcoin's growth potential. These challenges place Bitcoin at a crossroads. On one hand, it offers an exciting and decentralized alternative to the traditional financial system, promoting freedom and innovation. On the other, the problems it faces require urgent and effective solutions. The Bitcoin community and developers are constantly in search of improvements to the technology, such as implementing protocols that reduce energy consumption and increasing transparency to combat its use in illegal activities. The future trajectory of Bitcoin will largely depend on how these challenges are addressed and whether the solutions found are sufficient to mitigate the concerns of critics and regulators. The future of Bitcoin. The future of Bitcoin continues to be a topic of intense debate and speculation. As we move forward, various forces are shaping the trajectory that this pioneering cryptocurrency may follow. On one hand, growing institutional adoption suggests an increasing recognition of its potential value as an investment asset. Large corporations and traditional investors have begun to incorporate Bitcoin into their portfolios, seeing it as a hedge against inflation and an alternative to gold. The introduction of Bitcoin ETFs, exchange-traded funds, for example, has offered a new way for investors to access the cryptocurrency in a regulated and simplified manner, increasing its acceptability and integration into the traditional financial market. On the other hand, Bitcoin faces significant regulatory challenges. Governments around the world are struggling to understand how to deal with cryptocurrencies, oscillating between the desire to innovate and the need to protect consumers and maintain the stability of the financial system. The regulatory decisions to come will have a substantial impact on Bitcoin's ability to integrate into the conventional financial system and be adopted more widely as a form of payment. Moreover, Bitcoin's volatility, although it has attracted investors seeking quick returns, continues to be a barrier to its use as a stable currency for daily transactions. Unless this volatility can be controlled or mitigated, Bitcoin may continue to be seen more as a store of value, like gold, than as a viable substitute for government-issued currencies. Technological evolution will also play a crucial role in the future of Bitcoin. The implementation of solutions like the Lightning Network, which aims to address scalability and transaction speed issues, could significantly improve Bitcoin's utility as a currency. These technological innovations can help overcome some of the criticisms related to its energy efficiency and processing speed. Innovations such as ordinals and runes are introducing new functionalities to Bitcoin's blockchain, where ordinals allow for the inscription of individual data directly onto a Satoshi, paving the way for the tokenization of digital art and other assets directly on the Bitcoin blockchain, while runes explore new uses for smart contracts on the same network. However, one of the biggest factors that may determine Bitcoin's future will be the shift in public perception. As more people become familiar with what Bitcoin is and how it works, and as the infrastructure around cryptocurrencies becomes more developed and accessible, we may see an increase in widespread adoption. Consumer education and regulatory clarity will be essential to overcome the skepticism and distrust that many still hold towards Bitcoin. Finally, the future of Bitcoin will also be influenced by global market dynamics. In times of economic uncertainty, such as recessions or financial crises, Bitcoin may become even more attractive as a safe alternative to fiat currencies. Conversely, its adoption may also be affected by advancements in other cryptocurrencies that may offer technical or regulatory advantages over Bitcoin. Thus, while the future of Bitcoin is uncertain, it will certainly continue to be an influential and disruptive player in the global financial landscape. Whether as a store of value or eventually as a daily-use currency, Bitcoin and the technology that supports it have the potential to further transform how we understand and use money.